Let nothing disturb you. Let nothing frighten you. All things fade away. God never changes. Patience obtains all things. Whoever has God lacks nothing. God alone suffices. Saint Teresa of Avila. Understanding power. How financial systems shape history. Throughout history, the control of money has shaped nations more powerfully than armies or politics. To understand how power operates today, we need to look at the foundations of the birth of modern banking, currency, and debt, and how they evolved to influence the modern world. Banking began as a practical solution. In medieval Europe, merchants needed a safe place to store wealth and a way to transfer it without carrying heavy coins. Early bankers acted as trusted middlemen, holding deposits and issuing notes that represented value. Over time, these notes became accepted as money themselves. In the 17th century, central banking emerged, first with the Bank of England in 1694. Governments realized they could borrow large sums from banks to fund wars and expansion. In return, banks gained power to create money through lending, a privilege that still defines the financial system today. Currency and the idea of value. A dollar, a pound, or a euro has no intrinsic worth. Its value depends on trust that others will accept it tomorrow. Historically, this trust was tied to gold or silver, but as economies grew, physical metal could not keep up. In the 20th century, most nations abandoned the gold standard, allowing governments to issue fiat money backed only by the stability of their institutions. This shift gave policymakers greater flexibility but also made economies more vulnerable to inflation, speculation, and crises of confidence. When trust in money wavers, entire systems tremble. Debt as a tool of power. Debt connects every part of the economy. For individuals, it enables opportunity, buying homes, building businesses, funding education. For governments, it finances development and defense. But debt also concentrates power. Those who lend, whether private banks or international institutions, gain influence over those who borrow. In the modern era, this dynamic defines global relationships. Developing nations often depend on loans from wealthy states or organizations like the International Monetary Fund. Conditions attached to these loans can shape national policies, sometimes prioritizing repayment over social needs. The hidden history of financial influence. Much of what drives history happens behind financial decisions. The rise and fall of empires often followed the flow of credit. The Industrial Revolution thrived because capital was available to those who could innovate. Wars were won not only by armies but by those who could fund them. Even in democratic societies, financial institutions wield quiet influence. They shape regulations, lobby governments, and decide which sectors receive investment. This influence isn't necessarily malicious, but it shows how power has shifted from land and labor to capital and credit. Understanding power structures. When people speak of power, they often think of leaders or laws. Yet behind these visible forms lies the machinery of finance, the networks of banks, markets, and investors that determine what gets built, who gets funded, and how societies grow. Understanding this system is essential for citizens who wish to engage meaningfully in economic and political life. Financial systems are not inherently unjust, but they reflect human priorities. By studying how money moves, who controls it, and how it shapes opportunity, we gain a clearer view of the forces that define our world. From ancient coinage to digital transactions, money has been humanity's most enduring institution of trust. The story of banking, currency, and debt is not just about economics, it is about power, cooperation, and the choices societies make about who holds influence. To understand power today, follow the flow of money. It reveals not only how the world works, but how it might be shaped for the common good. How central banks control your life. Central banks play one of the most important roles in the modern economy. Yet, their influence is often invisible to most people. Understanding how they work helps us see how money, prices, and economic stability are managed around the world. Central banks are national institutions that oversee a country's monetary system. The most well-known examples include the Federal Reserve in the United States, the European Central Bank, the Bank of England, and the Bank of Japan. Their main goal is to keep their economy stable, meaning steady prices, low unemployment, and a healthy level of growth. One of the main tools central banks use is setting interest rates. When they raise interest rates, borrowing money becomes more expensive. This can slow down spending and cool off inflation. When they lower rates, borrowing becomes cheaper, which encourages spending and investment. These decisions affect everything from your mortgage rate to their interest on your savings account. Central banks also control the supply of money. They can create new money electronically by purchasing government bonds or other assets, a process called quantitative easing. This adds liquidity to the financial system and is often used during recessions to support economic activity. On the other hand, they can reduce the money supply by selling assets, which can slow down inflation and spending. Inflation control is one of their core responsibilities. When prices rise too quickly, people's purchasing power falls. By adjusting interest rates and money supply, central banks try to keep inflation around a target level, often about 2% per year. This helps maintain confidence in the value of money and keeps long-term planning possible for households and businesses. Central banks also act as lenders of last resort. In times of financial crisis, when private banks or financial markets are unstable, central banks can step in to provide emergency funding. This role prevents panic, stabilizes the banking system, and helps avoid deeper economic collapses. While central banks are powerful, they operate within specific legal and political frameworks. Most are designed to be independent from direct government control, allowing them to make long-term decisions that are not influenced by short-term politics. However, their policies can still have major social and political consequences because they influence employment levels, asset prices, and even government borrowing costs. Critics argue that central banks have too much influence over the economy and that their actions can widen inequality. For example, low interest rates can make it cheaper for large companies to borrow money while reducing returns for savers. Supporters counter that central banks are essential for maintaining stability and preventing economic crises. In short, central banks do not control individual lives directly. Instead, they shape the environment in which people make financial decisions. From the price of groceries to the value of your retirement savings, their policies ripple through every part of the economy. Understanding their role gives us a clearer view of how economic power functions, not through secret control, but through the management of money itself. Knowing this helps citizens make more informed decisions, hold policymakers accountable, and better navigate the financial world we all live in. If you like our videos, feel free to like and subscribe to Template Hub Driver, or contact us at templatehubdriver.com or just email templatehubdriver@gmail.com.